Hi students, how are you all? So finally costing paper was done. I got the paper, to be very honest, on September 11th only at around 7:30. One of the students gave us the paper. Now I released the MCQs solution on the next day. Although I had the complete paper, but I have been told this thing many times, sir, please release your answers once all the papers are over. So therefore, on 15th of September at 5 p.m., you are seeing this video, although that was ready by 12th evening. One thing that I do not do, I do not try to be discussing much. Paper was easy, paper was tough. I don't try to be doing that because it is tough for some people, it is easy for all others. Okay, so let's not waste our time in discussing that. I want to be completely doing two things. First, give you all the answers. So for those students who all have given the paper right now, they all know whether their answer is right or wrong. They can be guessing how many marks they will be getting. That is one thing. Second thing, for the future students, I want to be solving the complete paper over here. Now, everything, even the MCQs were there from our textbook. Okay, this is not a show off statement, but just to tell you all that few principles I've had from last 23 years as such, that you do everything from our book. We make you all practice last 2 or 3 years suggested. We make you all practice the RTPs and only do that. I don't meet you in middle every day. I don't try to be posting the thing that this is important, this is not. We do good content with you all. We give you all the rankings, 1 star, 2 star and 3 star. We know that how to be using 1 star, 2 star and 3 star, and accordingly you all prepare. All those students who were, all those guys who were our students, they will vouch that we spend good time. And that's it. That's the only thing that we all do. Rest you all are prepared for costing. Now let me go ahead and tell you that this time's paper was, I should not be saying that, but it was one of the easiest papers that ICAI has ever tried to give under the new course. Okay, so this is complete solution, complete PDF. In case you want this PDF, my Telegram ID is @AJNext. I'll write down over here @AJNext. Send us a message over here with your name, telephone number and the attempt that you have given or you will be giving, and we will mail you all the details, so therefore you can be getting this PDF. Okay, that is first thing. This is our Telegram ID, please. Okay, a few announcements that I have to be doing now. Many students who are in touch with us, those guys know that I am slightly moving away from commercial teaching, and that is why from last 3 or 4 years I've been trying to be putting all the things on YouTube. 2023 we started with this. We started to launch our course at bare minimum price of 99 rupees. And then we started away with the videos. We started away with the MCQ videos. We put each and every MCQ video on our YouTube channel, and that is something that we all do till date. Same thing for costing, same thing for FM, same thing for final CA SCPM. 2025 I had this aim also that I'll put entire course free. So therefore my previous batch course is completely available free of cost on YouTube channel, but better watch it on our website www.ajnext.com. All the lectures currently are there in English and Hindi mode. Complete course is there, including the soft copy test, everything. Now we have started them in complete English language also. They are coming out every Saturday, Sunday on our YouTube channel. For South Indian students, I wanted that there is a course completely in English that you all can be accessing. Okay. All those links of all our courses you will be getting over here. My latest courses are currently paid. Hope so one day, if God's grace will be there, I should be able to offer them to you all also at no price. Okay. Very less professors these days are doing a logical teaching. Ensure that you learn costing and FM. These are the only 2 subjects, okay, which are full logical, require absolutely no formulas, and I do not teach by any formulas. Okay, so all my courses link is here, whether of YouTube or of my website. Okay, you all can be seeing them. Okay, now let's try to be discussing few of the things as such. This time paper was quite easy. What I am going to be doing right now is I'm going to be telling you all the answers to all the questions of this entire paper. So in case you all have given the attempt right now in September 2025, these are all your answers as such. Okay. Now this will tell you that where is a particular question appearing in our book. Okay. This is reference to my latest book. Okay, please do remember lectures on the YouTube are there from my previous batch. This is the reference of the questions from my latest book as such. Each and every question where it is in our book, that is all written over here, which chapters they were, each and everything. Now coming over to the answers. Coming over to the answers. For question number 1 MCQ, this is your answer. Question number 2 MCQ this. Question number 3 MCQ this. Question number 4, question number 5. Then question number 6 to 10 were based upon a case study from CVP analysis. First 5 questions were there from cost sheet. Okay. Break even sales was this. Profit if the sales are reduced by 10% was this. Then this is cost of production and total cost as per absorption costing. This is your amount of variable cost and this is contribution per unit. Question number 11. This is your answer, 2,76,000. That is the cost of the goods transferred to the next process. This is how much will get transferred to cost of sales. In fact, almost a question like this was also question number 5C, I think. Okay. Both of them have the same reference to our book. Then the next question over here was of standard costing, super easy question. This was joint products and byproducts answer under contribution margin method. Things should be divided in the ratio of 3:2. And last question of your MCQs was from material costing. Answer is 24 days. This was part 1. In part 2, all the questions are from which particular chapter. All those things are written over here. And then all the other questions, your detailed questions start. First question, question number 1A was on batch costing. Your final answer was 1,000 rupees of selling price. Then labor costing. Your 2 answers, one is the normal rate per hour of 480 and 96,000 was your material cost. Then of standard costing, these are your 4 answers. Actual hours of variable overheads, actual rate per hour of variable overheads, total variable overhead cost for variance, and lastly total fixed overheads cost for variance. Then question number 2A was on toll companies in operating costing, and 2 answers were there. One is your total cost per month that was asked, and then the 3 types of rates for 3 types of vehicles, 20, 100 and 80. These should have been your answers. Okay, then overheads, this was only on reapportionment. Okay, you have to solve it by equation method. It was told to you in the question. So therefore this was value of x, this was value of y, and after reapportionment this is the total cost allocated to P1, P2 and P3. Then activity based costing. In activity based costing, these will be your cost per project and these will be the profit percentages as a percentage of the revenue. Okay, and accordingly this kind of the product, okay, that is the services to the education sector, fetches the highest amount of profit as a percentage of revenue. Okay, then there was a question on CVP analysis, that is on limiting factors. Finally you should be producing and selling 5,000 units of A and B, and second in this case highest profit will be this figure, 29,90,000. Budgetary control, that was your question number 4A. In that this will be the production, this will be the consumption. Total number of machine hours, I have given one answer, but for this there are few other options also that I have given. So answers for this part can be slightly different. I have given whatever I think ICAI will give, but then there are other 2 possibilities also. Whenever I'll discuss this thing in detail, I'll tell you all further. Then cost accounting system, there were 5 questions, 5 entries were there. Okay, so first entry SLC to GLA, second WIP to SLC, third WIP to wage control, fourth factory overheads to cost of sales. Then last one, cost of sales account debit to administration overheads. These were the 5 entries that were there. This was on ABC analysis. Okay, category A, category B and category C. These stocks come in category A, these 2 come in B, these 2 come in C over here. Then further, this was a question on material costing, very simple one, the EOQ. EOQ will be 3,000 units, number of orders will be 30 orders. Then over here, some things were required for question number 5C. Okay, so answer will be debit, credit and debit, and these will be the formulas that will be there. Okay, this is your cost sheet, how to treat under or over absorption, and how if you follow supplementary method, things start to be traveling down and affecting your finished goods stock, WIP and COGS. This question was there on that. Okay. This thing I am not 100% that everybody would have got this. Okay, we all have done this thing, but I'm not very sure that everybody would have got it. And then question number 6 is a theory. You will get the answers in my PDF, but I'm not going to be discussing that thing in this video. Okay, but overall the paper was quite easy. In case you all have prepared well, no, it would have been quite a easy task for you all. I think so, to be easily getting around 90 marks or something in costing. That should not have been a problem for you all. Okay, now just few small things before I will be starting. First of them over here is that costing requires only one thing, that is common sense. If you study with common sense, then it is not a problem. Okay, second, if you get certain, like, you get afraid in any of the papers, believe me, costing helps you to a great extent, because many people, including I was not very good in theory, so therefore I relied upon practical subjects. I ensured that I always got 80 and 90 in my practical subjects. That helps me to sail away in theory. That was one of the reasons also I was a ranker in foundation, I was a ranker in final, because I scored very good as far as the practical papers go. That does not mean ignore the theory, but what happens is that some people inherently are not very good in writing theory, so therefore that might affect their marks over there. So this thing, like, costing and FM helps you to a great extent. Lastly, on our Telegram channel, we still try to be updating you all about the MCQs and so on. I release one MCQ each and every day. Try to listen to that. That will help you to recap few of the things that we all have done. Can we start off with a detailed discussion for this entire paper? I will be doing question by question, and I will also try to show you that where is each question in our book. Okay, that will give you a good confidence also, that in case you do take up our course, then everything that comes, not now, but from last 20 years, because we update the thing so fast, okay, everything comes from whatever we all do. And we all simply tell you, do our course, plus do all the RTPs that in any case we'll be doing it up with you all, and do all the papers. That is more than enough. Do not try to be wasting your time in thinking what shortcut, what next. You only do this, that will be more than enough. Let's start off with the things for this September 2025 attempt. Let's do. Chali guys, so let's start to be doing part 1 of the paper. Now part 1, you always know that is going to be MCQ styled paper. So 30 marks, 15 questions each. Now coincidentally, again, everything was there from our books only. Everything. Okay, the questions up and so on. So question number 1 to 5 were there from advanced cost sheet. In our book, that was our question number 1. Of course, numbers will be different. That is common sense. But concept wise, the adjustment wise, everything was same. Question number 6 to 10 was on CVP analysis or budgetary control, whatever you all might call it. It is similar to question number 7 that is there in chapter number 14. Then question number 11 was of process costing. It is quite a simple question, similar to question number 1. Question number 12 was on overheads, your favorite type of things. That is how do you treat under or over absorption. So, similar to question number 6 and 7, to be honest. Okay, 7 was a bit tougher. 6 would have been a better reference to this. Question number 13 was on standard costing, whereby variances are there. Just try to find out the balancing figure. That was similar to question number 1 or 2. Joint products, it was contribution margin method. It is similar to question number 13 in our book. And then question number 15 was on material costing. You have to find out inventory cycle. Okay, we all have done that thing. Raw material consumed divided by average stock of raw material. That was similar to question number 26. So let's start to be solving September 2025 paper. So, question number 1. So, listen. The following information pertains to ABC Limited for the period 1st April 2024 to 31st of March 2025. When I'm reading this, I'm going to be saying that everything will be coming where, and I'll be writing it. Based upon that, I've already made the cost sheet. Okay, first. Royalty paid for production, this comes as part of direct expenses. Amount paid for power and fuel again comes as part of direct expenses. Packing cost paid for redistribution of finished goods. Now this is secondary packing that comes as part of marketing overheads. Okay. Example that you are somebody who gets the raw materials from outside. Okay. But then suppose you take 50 units, you pack it in box. So therefore transportation is easy. Okay. My main product is those 50 boxes. But I cannot send each and every box to the wholesaler separately. It's very difficult to transport. So therefore I take a big carton and I pack it up. I put 50 boxes in one single container. So that is called as secondary packing. Okay. Small example, there are two types of packing. You have a primary packing and a secondary packing. Jam bottle is primary packing that is required for your product. That is primary packing. So jam bottle is primary packing, but then I take 50 boxes, I take 50 bottles of jam and put them in a box. So therefore the distribution to the wholesalers is easy. That particular thing is nothing but secondary packing that always is required for distribution. So it is selling and distribution overheads, recollect? Okay. So selling and distribution means marketing overheads. Okay. It is the same head only. Okay. Further. Repairs and maintenance for plant and machinery. This should be part of factory overheads. Sales office building, this should be part of S&D. Insurance premium paid for plant and machinery. Plant and machinery will be there in factory. So factory overheads. R&D cost paid for improvement in the production process. This comes below, I'm making an arrow, factory cost separately. This comes below factory cost but above your cost of production. Okay. So whatever is the research and development cost, there's a separate head, no, for it. Okay. It comes over there. Depreciation on office building. This is part of general administration overheads. Salary paid to general manager. Again part of general administration overheads. Salary and bonus paid to sales and marketing staff. So again this is part of your S&D or marketing overheads. Receipts from sale of scrap and waste generated during the production process. If you'll remember, again this thing is reduced below factory cost. Okay. But above cost of production. Okay. Below factory cost but above cost of production, it is reduced. If you'll remember, we have discussed this thing also that ICAI treats this thing wrong. Okay. It should actually be reduced from above WIP because scrap is generated during the production process, but they all do wrong. Now let's try to be doing whatever ICAI does. Then value of stock of raw material, WIP in finished goods. Finished goods was not given. Value of stock as on 31st of March 2025, raw material, WIP in finished goods was not given. But these were opening stock, these were closing stocks. Acha. Raw material purchase were 15,000 kgs at the rate of 300 per kg. Pick up your calci. 15,000 into 300. So therefore this will be 45 lakh rupees. Okay. So this will be raw material purchases will be coming as part of direct material consumed. Freight inwards at the rate of 4% of cost of raw materials purchase. So therefore 45 lakhs into 4%. So this will be 1,80,000 and freight is always part of direct material purchased only. So ultimately will be coming in direct material consumed. Okay. But actually it is part of purchase cost only. Further. Wages paid to factory workers was 30% of raw material consumed. So once you get raw material consumed, please take 30% of that. You will come across your wages. Acha, see this adjustment now. Closing stock of finished goods was 9,90,000 more than the opening stock. So therefore, if this is opening stock, this is closing stock. Closing stock is 9,90,000. Higher than whatever was this. So therefore, if this figure was X, this was X plus 9,90,000. The average stock of finished goods was 11,55,000. How do you compute average stock of finished goods? Average stock of finished goods in this case is opening stock plus closing stock upon 2. So therefore, average stock of finished goods was 11,55,000. Okay. I guess with this data, you can be computing the answer. This plus this divided by 2 should be equal to this, no? Let me write it somewhere. Okay. So I'm going to be writing in red color X opening stock plus closing stock 9,90,000 divided by 2 would have been equal to average stock. So therefore 11,55,000. Okay. So let me solve it. Let's take 2 to the other side. 11,55,000 into 2. 23,10,000. Just a sec. 23,10,000. 9,90,000 I'll subtract from there. I'll take it that to the other side. 9,90,000. 13,20,000. So x plus x will make that as 2x. Okay, so 2x is equal to this. Let's divide by 2. So opening stock, I'm going to be writing over here, will be 6,60,000 and closing stock will be 9,90,000. We add to it 16,50,000. Fine. So now you have all the numbers. Sales during the period from April 24 to 31st of March 2025 was 110 lakh rupees. So sales comes in sales only. That's the last thing that is there. Okay, what are the questions? Bring me the questions. On the basis of above case scenario, I have marked the answers, but that's okay. On the basis of the above case scenario, you are required to answer the following questions. What is cost of goods sold? You will get that thing from the cost sheet. What is amount of profit? You will get that thing from the cost sheet. What is direct labor cost? You will get it from the cost sheet. What is prime cost? You'll get it from the cost sheet. What is factory cost? You'll get it from the cost sheet. So what else are we waiting for? Let's start to be making the cost sheet. Okay. So try to be seeing this. Opening stock of raw material was given to you, 5 lakhs. Add purchases, we calculated it. Freight on raw material purchase was 4% of this figure. Less closing stock of raw material was there. Okay. So therefore, this is your raw material purchased. 30% of that is nothing but your direct labor cost. There were two things in direct expenses. One was royalty, one was amount paid for power and fuel. Total it up prime cost. Prime cost was one of the requirements. Direct labor was one of the requirements. Further, add factory overheads, can also be called as works overheads. There were two items in that. Repairs and maintenance of plant and machinery. Insurance for plant and machinery. Okay, that totals up to this. Then gross factory cost will be this. Adjust your WIP stock. Add opening less closing. So therefore, this will be your net factory cost or simply your factory cost. So therefore, this is your factory cost. Two things will be adjusted now. One is your R&D. I told you below factory cost, above cost of production we added. Less in this case, your credit for the scrap. Okay, of 20,000 rupees. The moment you all do that, this will be nothing but cost of production for you. Add opening stock of finished goods, less closing stock of finished goods. We computed that just now. This will be giving you all your COGS. Once you all do that, add general administration overheads. There were two of them. One is depreciation on office building. Other is a salary to the general manager. So this will be your answer over here. Okay, then add up your selling or distribution overheads. You can call this thing as selling, distribution and marketing overheads. Whatever you all wish to be calling. There were three things in that. Performance bonus to the sales staff. Repairs and maintenance for the sales of his building, and lastly packing, which is secondary. Once you all do that, this should be your cost of sales. Sales was given to you in the question. You compute profit as a balancing figure. Okay. Now from all these things, you can come across all your answers here. Cost of goods sold. Cost of goods sold was over here. That is this answer. First answer, 69,62,920. Second one, amount of profit. Amount of profit will be this figure. 11,20,580. 11,20,580. Then direct labor cost. Direct labor cost 15,21,000. 15,21,000 comes right from here only. This particular figure. Then prime cost. Prime cost will be this figure. 75,82,600. That is your this answer. What is factory cost? Factory cost is over here. That is 79,55,120. So therefore, these are your 5 answers for cost sheet. It was relatively a easy question. Nothing much to be done in all these cases. Okay, chali. So this question is all discussed. Chali guys, we will start away with the questions from 6 to 10. They were on CVP analysis. Okay, easy questions, nothing much in them. JMS Limited, a soft drink company, is intending to introduce a new product, herbs infused mineral water, to the market. Annual sales of this new product is estimated at 36,000 units with a selling price of 75. Can I just multiply please? So 36,000 units will be sold at 75 rupees. 36,000 into 75. So therefore this will be rupees 27 lakh rupees. Further, the cost estimates for this new product are as follows. Direct material consumed, that is a variable cost. Direct labor cost, that is supposed to be a variable cost. Manufacturing overheads, which are variable, is supposed to be a variable cost. Manufacturing overheads fixed, it's supposed to be a fixed cost. General administration overheads variable, so variable cost. General admin overheads which are fixed, so supposed to be a fixed cost. S&D, which is variable, supposed to be a variable cost. S&D overheads fixed, supposed to be a fixed cost. There will be no closing stock of herbs infused mineral water. So whatever quantity is produced, that quantity is sold also. On the basis of case scenario, you are required to answer the following MCQs. What is break-even sales? One small thing, beta. How do you find out break-even sales? Break-even sales formula is nothing but fixed cost divided by PV ratio. So fixed cost. I guess fixed cost you all will be able to gather from here. Fixed cost, fixed cost, fixed cost. There are 3 fixed costs. And for PV ratio, you require contribution and sales. Sales was this. For contribution, you require the variable cost. So what I thought, I'll just make an income statement. Okay. So over here, you all can see that I have made an income statement. Sales, 36,000 units at the rate of 75 rupees. Please do remember in MCQs, workings are not needed. Okay. So therefore, I've also done a lot of things in rough only as such. Less variable cost. Okay. In variable cost, you all had 5 of those costs, no? 1, 2, 3, 4 and 5. All these 5 costs I've written over here. Okay. Total of variable cost is this. Sales minus variable cost will be giving you all contribution. Okay. Less your 3 fixed cost will be giving you all profit. Let's find out our PV ratio first. Your PV ratio is nothing but contribution divided by sales into 100. That works out to 24%. Okay. Then find out your break-even sales. That is fixed cost. Fixed cost is 4,68,000 divided by your PV ratio. So therefore, your break-even sales will be 19,50,000. That was supposed to be, in this case, your first correct answer over here. Okay, then next one. What will be the profit if actual sales are 10% lesser than estimated sales? See, it's very simple. If you'll try to be thinking, you were selling 36,000 units. Now those guys are saying you're going to be selling 10% less. Tell me what will be the amount of new profit. Okay, can we say if sales fall down by 10%, variable cost will also fall down by 10%. Forget these two. Contribution will also fall down by 10%. So therefore, pick up your calci. 6,48,000 less 10%. 583,200. Okay, 583,200. This will be new contribution if sales fall down by 10%. But fixed cost will remain as it is only. So less 4,68,000. That is your fixed cost. So therefore, this will be your profit. 115,200 will be nothing but your profit. So this is your answer to the next part. Okay then. What is cost of production and total cost as per absorption costing? See. Absorption costing says even fixed cost is your cost, beta. You have to include it as part of your cost. Okay. Acha. But then do remember in cost of production, only production cost will come. Only production cost will come. And in total cost, all the types of cost will be coming here as such. The 4 options for us are this and this, this and this, this and this and this and this. Okay, see. Now, let me gather all the cost first. Okay. Now, they want, I'll come back to the question, that'll be far better. I want cost of production and total cost. So, in cost of production, think of your cost sheet, beta. So, in cost of production, what all cost will be coming? This forms part of cost of production. Direct labor cost, this forms cost of production. Manufacturing overheads, this forms part of cost of production. This also forms cost of production. Okay. These 4 things are nothing but part of cost of production. General and admin does not come above COP. They come below COP. S&D does not come above COP. It comes below COP. So all of them will not be coming. So total of all these things that will be forming part of COP. Then total of all these that will give you your total cost. That is whatever I have done over here. See, I've added the first 4 costs that gives me my COP. Then I've added all the other costs also because they come below the COP and I'll try to be arriving at total cost. 20 lakh 18,750, 25 lakh 20,000. So 20 lakh 18,750 and 25 lakh 20,000 are supposed to be your answers. Okay, then what is the amount of variable cost? What is the amount of total variable cost? Too simple, yaar. We did that thing no, over here. 20 lakh 52,000. 20 lakh 52,000. What is the amount of contribution per unit earned at estimated level of sale? See, this is your contribution. No, please take this figure 6 lakh 48,000 divided by 36,000 units. No, so therefore answer will be 18. This figure I divided by 36,000 units. Contribution per unit will be 18 rupees. Okay, easy question. Just you have to be knowing the basics of all these things. Okay, chali. This discussion is also done. Chale guys, question number 11. A product passes through process 1 and process 2. Materials issued to process 1, needless for me to be saying, question is on process costing. Materials issued to process 1 are 1,60,000, wages 70,000 and manufacturing overheads were 58,000. Were charged to process 1. Actually, question is only about process 1. Okay, be careful of that. Anticipated normal loss was 6% of input. 9,200 units of output were produced and transferred to process 2. Further, there was no opening stock. Okay. Input of raw material issued to process 1 was 10,000 units. Scrap has realizable value of 10 per unit. What is the value of the units transferred to process 2? Now, I can solve this question directly also. Okay. Or I can make a process account. Okay. Let me make a process account for you all and let me tell you all like that. That will be far better. So, if you all try to be making a process account, in process account, we will try to be making the quantity and amount. Over here also quantity, over here also amount. Okay, quantity, amount. Now, so over here, first of all, there is no opening stock to material, to labor, to factory overheads. Now, input was 10,000 units. So, 10,000 will be written over here against material. Material cost was 1,60,000. Wages was 70,000. Manufacturing overheads were 58,000. Okay. Then normal loss was 6% of input. So therefore, by normal loss, 6% of input means 600. Scrap is sold at the rate of rupees 10 per unit. So therefore, that will be nothing but 6,000. Okay. Now after this, first job that you all have is calculation of normal cost. Normal cost is direct material plus direct labor plus factory overheads. If there is direct expenses, add that also. Less scrap value of normal loss, that is 6,000, divided by expected or normal output. Expected output or normal output will be out of 10,600 supposed to be the loss. So therefore, this cost is to be charged to 9,400. That is whatever I have exactly written over here. Okay, so therefore, normal cost will be rupees 30 per unit. Okay. So that comes out to rupees 30. Now, how much is transferred to the next process? I'm going to be writing over here by process 2. By process 2, how many units are there? 9,200. So 9,200 units will be valued at 30. 9,200 into 30, 2,76,000. If they ever ask me to complete the count, then there will be abnormal loss also, no? Over here of 200 units. That will also be getting valued at 30 only. So 200 into 30, that answer would be 6,000 bucks. Okay, that's it. So therefore, I guess those guys have only asked you this answer. So therefore, this is supposed to be your correct answer of 2,76,000. You might not show all this working, and that is why I simply had this calculation over here. My job gets finished with that. Okay, chal, this question is all over. Chali, let's start it off with question number 12. This was on overheads, the most common questions here which are there. PMP Limited manufactures a single product and absorbs production overheads at predetermined rate of rupees 20 per machine hour. So out of all these 6 absorption methods, they all follow machine hour method. That is at the rate of 20 per machine hour. At the end of the financial year 24-25, it was found that actual production overheads incurred was rupees 12 lakhs. It included rupees 80,000 on account of return of obsolete stores and 30,000 being wages paid for the strike period under an award. So actual overheads incurred was 12 lakhs. Remember this line, please. It included 80,000 rupees on account of written off of obsolete stores, and 30,000 rupees being wages paid for the strike period under an award. Don't you think it's exactly same as whatever we all have done? In any case, please do remember that these are not expenses, beta. These are losses actually. Okay. And we want overheads. Overheads means expenses. These are not expenses. These are losses. The actual machine hours worked during the period were 50,000, not rupees 50,000, were 50,000. The production and the sales was 20,000 units and 18,000 units respectively. It's a typing error, I guess, from our side, not from the institute side. So production was 20,000 units and sales was 18,000 units. Okay, remember this data. What will be the amount of under-absorbed production overheads to be charged to? Now this line is very important, cost of sales. To be charged to cost of sales. Okay, see. Now first of all, you have to find out what will be the amount of under-absorption to be charged to cost of sales. No, find out amount of under-absorption. No, first. How do you find out? First of all, actual overheads incurred are 12 lakhs. But frankly, all of them are not overheads. There are losses also, no, in this. Losses are this, losses are this. So therefore, from 12 lakhs we subtract. Net amount incurred is 10,90,000. From 10,90,000, we subtract our overheads. Okay, now we subtract our overheads which are absorbed to the production. So overheads. Overheads absorbed. For that you require absorption rate. Absorption rate is rupees 20 per machine hour. What does rupees 20 per machine hour mean? Whenever you work for one machine hour, charge 20 rupees as overheads. How many machine hours did you work for? 50,000 machine hours, no? So 50,000 machine hours into 20. So overheads absorbed are 10 lakhs. So finally under absorption is 90,000. Okay. Now this is your amount of under absorption. Please do remember. But this 90,000 rupees of under absorption, if we follow our best method, that is supplementary method, correct? 90,000 has to be charged to all the goods that you all have produced. Factory overheads are incurred for production, right? So 90,000 divided by 20,000. So therefore, this will be nothing but your supplementary rate. Supplementary rate will be nothing but in this case 4.5 rupees per machine hour. Okay, 4.5 per machine hour. But then do remember you have to find out amount of under absorbed production overheads to be charged to cost of sales. In cost of sales, you will only have cost of those goods which are sold, right? Okay, and how many units are sold, beta? 18,000. So 18,000 into 4.5 per machine hour. So therefore, it will be 81,000 over here. So therefore, answer should be 81,000. That's what I've written over here. Supplementary rate of overheads will be 90,000 divided by 20,000. Okay, once you get that, amount to be charged to cost of sales will be quantity sold, that is 18,000 into 4.5, that is rupees 81,000. Okay, now we all have done all these things by making a cost sheet also, but I need not be doing that over here. These are MCQs, presentation doesn't matter, beta. Okay, so you all can directly think and try to arrive at the answer. Okay, chali, all done. Chali, we'll start away with question number 13. You will not be able to get a simpler question on standard costing beyond this year. Too easy yaar. The cost accountant of AO Limited has provided the following information for investigation of variances. Material cost variance 4220 favorable. Material usage variance 18540 adverse. Material yield variance 8390 favorable. Management accountant is not being able to comment on the reason for variances as information is not sufficient and seeks your advice to help out on the correct amount of material price variance and material mix variance. So they want you to be finding out these two variances. What is the correct amount of material price and material mix variance? You have your four options. So what I'm saying, if I ever try to have a chart like this, total material cost variance broken up into material price variance, material usage variance. Usage variance gets broken up into material mix variance and material yield variance. These are your 6 answers. These are your 5 variances that are there. This thing is 4220 favorable. Usage variance is 18540 adverse. Yield variance is 8390 favorable. Find out both of them as a balancing figure. That's it. That is the only job here that you have to be doing. So see, this is favorable, this is adverse. This must be more favorable, no? Because the total variance was favorable. So 4220 plus 18,540. So therefore this figure is 22,760 favorable. Okay, then this variance is sum of this and this. This is adverse, more adverse. This is favorable. So therefore this must be far more adverse, no? So 18,540 plus 8,390. So therefore it will be 26,930 adverse. These are your correct answers, and accordingly D is your final answer. Okay, material price variance is 22,760 and material mix variance is 26,930. Okay, that's it about this question. Nothing much here. All done. Chali, we'll start away with question number 14. This was on joint products and byproducts. Now, there are many methods that you all have done for apportionment of joint products and byproducts. One of those methods, very less famous method, is contribution margin method. And this question was there on that only. Under contribution margin method, we divide all our cost into two types, variable and fixed. For variable cost, we follow output method. We divide the variable joint cost in the ratio of output. Once we all do that, sales minus that variable cost will start to be giving you all contribution, and we divide fixed cost in the ratio of that contribution. That is how that method works, right? So let's start to be implementing that thing in this question. Read. A company produces two joint products X and Y using the same type of raw material. The cost to produce 200 units of X and 400 units of Y are as under. Material 80,000, labor 40,000, fixed overheads 20,000. Sales of product X were 20,000 units at the rate of 350 per unit. And product Y was 400 units at the rate of 250 rupees per unit. Using the contribution margin method, in what ratio will fixed overheads be apportioned between product X and product Y? Okay. So you all have four options over there. See. First thing is, in this case, this is variable cost. This is variable cost. This total is how much, beta? 1,20,000. 1,20,000 gets divided in the ratio of output. Output was how much? 200 units and 400 units. That's the first thing that I have done. So product X, product Y, output is this and this. Okay. Variable cost gets divided up in the ratio of 2:4. That is this particular figure. Okay. Now, just one added extra thing, although does not impact this question. You have to find out total variable cost. If there are any post-separation cost, those will be variable cost only because they are incurred for a specific product, right? In this question, there are none. So, therefore, nil I have added. So, this plus nil will be giving you all this. Once you all do that, okay, then you have to find out contribution. How do you find out contribution? Sales less variable cost. Sales. This into this will be sales. This into this will be sales. Check over here. I've calculated sales over here by multiplication of the units and the selling price. Less this figure and this particular figure. That will give you contribution. And now the fixed portion of joint cost, that is 20,000 rupees, will get divided in the ratio of contribution. Contribution is 30,000 and 20,000. So therefore 3:2. Answer is 3:2. I have done just one step more. I don't know why. But your fixed overheads was 20,000, that I've taken over here, and 20,000 rupees will get divided in the ratio of 3:2. That is whatever has been done over here. Okay, that's it for this part. So therefore correct answer is 3:2. Easy question. You should just be knowing what do you mean by contribution margin method. Okay, chaliye, done. Chaliye, our last question, this is from chapter of material costing, chapter number 2. You have to just compute something called as inventory cycle, that is the average number of days for which the raw material is kept with us. Okay, so we are doing that question. The management of Y Limited has provided the following information. Opening stock of raw material 25,000, closing stock of raw material 75,000. Average stock will be opening stock plus closing stock upon 2, that is nothing but 50,000 rupees. Raw material consumed during the year is 7,50,000. What will be the number of days for which average inventory of raw material is to be held by Y Limited? Assume 360 days in a year. You all can do by whatever method. If you know directly how to be computing average number of days, you can be doing it. Else, how we all do it is usually like this. On an average, you have 50,000 rupees of raw material stock, which is issued to the factory. And we purchased We issued, purchased, issued, purchased, issued. That thing happened how many times in a year? So 7,50,000 rupees of raw material has been consumed. Average stock of raw material is 50,000. So therefore, this cycle happened 15 times in the entire year. Okay, 15 times in the entire year. So one cycle takes how much time? Those guys have told 360 days. You take divided by 15, that will make it 24 days. Okay, so therefore answer should over here be 24 days. Okay, that is after every 24 days we issue the raw materials to the factory. That's it. Okay, so this question is also done. All the MCQs are over. As per me, if you were a person who all had prepared normal also, and if you all had done everything that we all have told in class, okay, because what I tell you all to do is actually a very limited thing. I always tell you, do everything only from our book. Do not see anything else, especially all the stupid things on YouTube. Last minute revision, this, all nonsense stuff that is, okay. Do your book, don't waste your time in all those things. Rather than that time you all can use for the other subjects here. So therefore, only do that much. If you would have last 4 years, if you would have only done whatever was our book, everybody would have got more than 90 quite easily in costing. Okay. Chaliye, this question is altogether done. Chaliye, MCQs are altogether over. Now we'll start away with part 2. Please do remember that MCQs are compulsory, but in part 2 you do get an option that out of 5 questions you have to be doing any 4, but question 1 of them is compulsory. Question 1 that was there was from batch costing. Marks I've written over here. Easy question. Labor costing, easy question. Standard costing, I'll say okay question. Okay, not difficult. Okay, it was a normal question. Then there was one good question on toll companies that was there. And to be very honest, it was a big question. We did our question in case of tolls, if you all remember. Only thing is, in our question of tolls, there was only one single type of the vehicle. And over here, there are 3 types of vehicles. In case you all remember, in our test series, I had given you that question on purpose, whereby there is more than one type of vehicle. That was a question in relation to tolls only. So if you merge both of them, that's why I've written over here question number 22 and the test that we all had conducted. Okay, further. Overheads, this was simply the case of 3 production departments, 2 service department, do reapportionment using simultaneous equation method. Okay, we all have done, I guess, a lot of questions like that. Activity based costing was kind of a gift to you all from the institute. Okay. CVP analysis, this was on limiting factors. I have told you all ample number of times that limiting factor is super important. Okay. So this was a question whereby raw material in kgs was in short supply. In such cases, you have to give ranks based upon contribution per kg of raw material. Budgetary control question was almost whatever we all have done. You produce, that is equal to 80% of current quarter sales plus 20% of next quarter sales. The same adjustments were there. Cost accounting system, there were 5 transactions, pass the 5 entries. Okay, those were all quite normal transactions. This material costing, I usually think ICAI should be asking some good questions on EOQ and ROL. But if you all remember, in the last attempt, no, in Jan 2025, they asked the first question on that and they all missed it. Then we abused them a lot also. So this time they did not take that risk also. They simply asked a question on category A, category B and category C stocks. Then there was a question whereby only EOQ quantity had to be found out. The data was given as well as number of orders. And overheads chapter, just some of the supplementary rates, you have to write down the formulas. Okay. Then there was question number 6 also, but I do not discuss the theory part. You all know that. It will be there in the PDF. Okay. So, can we all start to be solving question number 1A, please? So, let's start it off. So guys, so batch 2, first question, and this will be lookalike of the far tougher question that we all have done. Okay, so let's start it off. RST Limited manufactures a standard line of office desks. The company operates within a monthly manufacturing capacity of 5,000. So these are capacity. If they say capacity, by default, we cannot increase that capacity. Okay, that's a maximum capacity. The following data relates to the output of and the cost of the 2 consecutive months of production. April and May units manufactured 3,000, 3,800. Direct material, direct wages. Acha, one small thing. Direct material is supposed to be a variable cost. If it is variable cost, per unit should be same. 15 lakhs divided by 3000. 15 lakhs divided by 3000. It comes to rupees 500. 19 lakhs divided by 3,800. It comes to rupees 500. Okay. So material cost, I'll write down over here. It is rupees 500. Acha, direct wages same way. 6,000 is for 3,000. So therefore, please divide. It will be rupees 200. Over there also 7,600 divided by 3,800. It will be rupees 200. Factory overhead. See, if you will divide this by this, no. 3,50,000 divided by 3,000. It comes to 1166.67. Let's do the next one also. 4,30,000 divided by 3,800. It does not come to the same number. So then what is the catch? The catch is, of course, it is not fully variable cost because per unit is not same. It is not fixed because both these numbers are not same. So therefore, some part might be fixed, some part might be variable, and you all can try to think to segregate it. Okay. By default, there will be two parts. So one is fixed, one is variable. In the month of June, this is April, this is May. Now in the month of June, number of units manufactured will be 4,000. Okay. However, the prices of direct material will increase by 10%. So 500 will become 550. I'll write down over here. Direct wages will increase by 15%. So 200 will become 230. Increase it by 15%. Fixed factory overheads will reduce by 20%. But you don't know how much are fixed factory overheads because these are variable plus fixed overheads combined. No. The company desires to earn a profit of 11% on selling price. Fine. Calculate the selling price per desk in the month of June when the monthly output is 4,000. Okay. So we wish to be finding out the selling price. No, it is simple. Cost data is given to you for the previous 2 months. For the month of June, if any changes are there, those are told to you in these 3 lines. Do those changes. Once you all do that, then start to be making a cost sheet. Okay. So one small thing, direct material is 500. Direct labor is direct material is 500 plus increase it by 10%, 550. Direct labor was 200, increase it by 15%, 230. Sir, then what to do? Then in that case, factory overheads, let's try to break it up into 2 parts. See, factory overheads increased by how much rupees beta? 80,000. This 80,000 must be the increase in fixed part or variable part? Variable part. Whatever fixed is there in this and there in this also. So therefore, this increase is only due to the variable part. And this 80,000 rupees is because of these 800 extra units, no? So 80,000 divided by 800, your variable factory overheads are 100 per unit. So therefore, this is direct material, this is direct labor, this is variable factory overheads. Okay. Now, once you will get 100 per unit, substitute it anywhere, start to be getting fixed factory overheads. So 3,000 units into 100. So therefore, your variable overheads must be 3 lakhs. But factory overheads are 3,50,000. So therefore, fixed factory overheads will be nothing but remaining 50,000 rupees. Okay. But now those guys are saying fixed factory overheads will be reduced by 20%. So 50,000 less 20% will make it 40,000. It will be getting reduced by 40,000. No change is mentioned over here. So therefore, it is supposed to be remaining same. So I've got 4 informations now for making my cost sheet. Now, please do remember in the month of June, how many units will be made here? 4,000. Let's start to be making cost sheet for 4,000 units. Accordingly, I have done that calculation over here. Direct material 550 per unit. I told you that thing over here. Direct labor 230 per unit. I told you that particular thing. Total it up 780 rupees. Variable factory overheads is 100. And fixed factory overheads is a lump sum figure. That is nothing but 40,000. I told you that particular thing over here. Once you all do that, you total it up. So therefore, this is your total cost. Okay. Now, the profit margin that you all are looking for is 11% on selling price or 11% on sales beta. So, this is 11% of this. If this is 100, this is 11. This will be remaining 89. Please cross multiply. So therefore, this will be your profit. Add up this and this. You will start to be arriving at sales. And once you all get sales, divide by the number of units. Number of units are 4,000, no? So 40 lakhs divided by 4,000 will be giving you a selling price. You will be getting marks for this particular thing mainly. So therefore, your selling price will be 1,000. We covered up far tougher question in fact than this. Okay, under the chapter of batch costing, this was far more easier because we are not exceeding the capacity of 5,000 units. If we were exceeding, then the order will be spread over 2 months and that time absorption costing will start to come into play. No, over here it is quite easy as such. So Easy problem. Okay. So your final answer is your selling price will be rupees 1000. Okay. Chali. All done. Please do ensure that you all make your working notes. I have made working note. I get very short time. I might not be doing it. But then whenever my solutions go out, it is very evident that I ensure that anybody who is taking my solution is understanding that solution. I don't have a standard way of making the working notes. No. But I do try to be ensuring that any calculation that I need to be doing is shown by way of a working note. Okay, chali. So working note 1 was for 500, working note 2 was for 200, and working note 3 I try to break up my factory overheads into two parts. Okay, fixed and variable. Okay, chali. So this question is all done. Chali guys, question number 1B, this was on labor costing. And you all have done one question like this in the classroom. I made you all immediately do one more question like this in homework also. So 2 questions you practiced and same question came. The following information relates to the 2 workers, Ajoy and Bijoy, who are engaged in producing the same product by using the same material. Time allowed to make the product 40 hours. Actual time taken to complete the product, 32 hours by Ajoy, 30 hours by Bijoy. Okay. So for both of them, time allowed is 40 hours. Bijoy is efficient, completes the job faster in 30 hours as compared to 32 hours. Normal wage rate. Same for both. Now please do remember Halsey and Rowan scheme, no? They are time basis schemes. So therefore workers are paid per hour. Okay. Because Halsey and Rowan will be coming shortly. Hence it was important for me to tell you all this. So normal wage rate means rate per hour. Normal wage rate means basic wage rate per hour. I have, this answer is not given to you. In fact, you have to try to find it. Okay. Later on, I have told this particular thing. Let normal wage rate or basic wage rate be rupees Y per hour. Okay. Factory overheads recovered 360 per hour for actual time taken by each worker. Factory cost for the product for each 124,800 for Ajoy and same figure for Bijoy. Calculate normal hourly wage rate. So I have let it be Y. Compute cost of material used. I have let it be X. Okay. Now see. Factory cost comprise of 3 things, beta. Direct material, direct labor and factory overheads. Okay. Now see. Direct material for both the workers, it will be X. I'm going to be writing over here X. Okay. Factory cost is 124,800. Factory cost is 124,800. It will be comprised of DM, DL and factory overheads. So direct material is X. Factory overheads is how much, beta? It is 360 per hour actually worked. So therefore 360 into 32. 11520 is factory overheads for Ajoy. 30 into 360. 10,800 it will be for Bijoy. Now, sir, what about direct labor? Now, direct labor is the only thing that you'll have to try to work on. Okay. And how that particular thing will be done? Listen now. Let normal wage rate. See, let material cost be X. Let normal wage rate in this case be rupees Y per hour. Okay. Now, see. Please do remember, first guy is paid based upon Halsey and Bijoy is paid based upon the Rowan scheme. So therefore, Halsey Rowan depends upon time allowed, time taken, time saved. Okay. So time allowed is 40 hours, time taken is 32 and 30 hours. Time saved will be 8 hours and 10 hours. Now, labor cost constitutes 2 things, beta. One of them is basic wages, other of them is bonus, right? Okay. So, first of all, in this case, let's compute basic wages. Basic wages in this case is 32 hours at the rate of Y per hour. So 32Y. For Bijoy, it will be 30 hours at the rate of Y. So 30Y. That is your basic wages. Now, as far as the bonus goes, Ajoy is paid based upon Halsey scheme. Okay, I've written this thing over here. This is for Ajoy. And this is actually for Bijoy. I think I wrote opposite. Okay, but that's okay. I've computed to correct only. So 50% of time saved. Halsey scheme is that formula, right? 50% of time saved into rate per hour. So 50% of time saved, that is 8 hours, into rate per hour, that is basic wage rate per hour, that is Y. So 50% of 8Y, that is 4Y. And over here, this is time saved, 10 hours, upon time allowed, that is 40 hours, into basic wages, that is 30Y. Okay. So 1 upon 4 into 30y is 7.5y. So therefore you all can be seen. So now I'm starting to compute my labor cost. Labor cost will be sum of your basic wages and your bonus, correct? Basic wages is this, bonus is this, added 36y. And over there 37.5y. So therefore now I'm going to be writing that data over here, 36y, then in this case 37.5y. Now these are precisely the equations that I have written over here. You all can see 124,800 is equal to x plus 36y plus 11,520. Over here 124,800 is equal to x plus 37.5y plus 10,800. You solve it, you will start to be arriving at the answers for y first. So y will be coming as 480 per hour. You will be solving, you will start to be getting x at the rate of x will be 96,000. So therefore your material cost in this case is 96,000. This figure, and this is 480 per hour. It was a 5 marks question, honestly pretty straightforward question. Okay, there are no adjustments in that as such. In fact, even the last question that was there, okay, of 5 marks, I guess, that was quite a simple question, no great adjustments up and so on. Okay, chali. So this question is altogether done. Question number 1C of standard costing asked only for 4 marks because there were 4 required parts. Now, one thing that you all can try to be thinking, and I think so this is how ICAI should be giving marks also. 4 marks and there are 4 parts. So logically everything should be having 1 mark. In such cases, I can try to think if my one answer is correct, I should be getting 1 mark. That is whatever you all can think. Now this question that is there is on variable overheads and fixed overheads. Please do remember, variable overheads are dependent upon output, but fixed overheads are dependent upon period. Out of 4 questions, 3 questions are on variable and only 1 of them is on fixed. Let's do this. MD Limited has furnished the following information for the month of August 25. Standard variable overheads rate rupees 3 per hour. Okay. Standard hours for per unit of production, that is 5 hours. So for 1 unit, they should be taking 5 hours. Pay the worker at the rate of 3 per hour. Acha, actual output 15,560 units. Okay. Variable overhead efficiency variance is given to you 11,400 favorable. Variable overhead expenditure variance is given to you 37,000 adverse. Standard fixed overheads rate is rupees 2 per hour. Actual fixed overheads is rupees 1,85,000. You are required to compute actual hours. Okay, actual variable overheads rate per hour, variable overhead cost variance, and fixed overheads cost variance. Okay, now one thing over here, see, I'll try to solve the question. Okay, listen to me very carefully. Fixed overheads are always, variable overheads are always dependent upon output. Variable overheads are always dependent upon output. How much was actual output, beta? 15,560. So therefore, we always start to be thinking like this. Revised standard actual for 15,560 units. How many hours you should have taken? At what rate per hour you should have incurred variable overheads? What should have been your cost of variable overheads? In reality, what happened? So for 15,560, we are going to be doing all the calculations. For 1 unit, worker should have taken 5 hours, no? So 15,560 into 5. This is 77,800. Okay, 77,800. To be paid at the rate of 3 per hour, that is this particular figure into 3. This is 233,400. Now, actual data, nothing is given to you. You do not have this, you do not have this, you do not have this. But then instead of this, you all have 3 variances as such. Now, this much data you all can see I have written properly over here. Okay, 77,800. 3 rupees and 233,400. So what I'll do, I'll rub out this part. Okay, please do note, I do not have actual data. Now I'm trying to be thinking which of the datas I should try to be using first. See, you want actual hours, no? How do you compute efficiency variance? Sir, efficiency variance is how many hours we should have taken minus how many hours we have taken into the standard rate. There is only one missing figure, no? Use it as such. Okay, so therefore, efficiency variance, 11,400 favorable. One thing, our students don't know any formula. We only do everything by common sense. Okay, that is more than enough. Although I've written the formulas below, okay, but it is pure common sense, efficiency. For 15,560 units, you should have taken 77,800 hours. How many hours you all took? I don't know that particular figure into standard rate. So, 11,400 divided by 3. 3,800 favorable is equal to 77,800 minus X. Correct. Now, workers were efficient. So, how do you know? Variance is favorable. So, therefore, X should be a lower figure, no? So, 77,800 minus that figure. So, X should be 74,000. That is whatever I must have calculated over here. See over here. Actual hours are nothing but 74,000. Okay. The same calculation that I've done over here. Once you all do that, I have this figure with me right now. This is 74,000. Okay. Now, in this case, let's start to be using the other variance. What is that other variance, beta? Expenditure variance. Expenditure variance is 37,000 adverse. This is similar to rate variance. At what rate you should have incurred your variable overheads? 3 rupees per hour. At what rate did you incur? X rupees. Into actual hours, no? 74,000. Let this figure go over here. 0.5 adverse is equal to 3 minus X. Now, variance is adverse, so you must have paid a higher rate. So, X will be higher by 0.5. So, therefore, X will be 3.5 over here. So, therefore, this figure will be 3.5. Okay. 74,000 into 3.5. In case you all want, not compulsory, 2,59,000. Okay. So, this is done. So, actual hours, we got over here 74,000. Actual rate per hour, 3.5. Variable overhead cost variance. See, I'll give you two options. Either you can do this minus this. 25,600. Adverse, na, I think. Or you can add both of them also. Expenditure plus efficiency will give you that answer. No, I think I must have written this method. Let's add up both these. You all can check it up. Variable overhead this plus this 25,600 adverse. Okay. So this thing is also done. One thing, previous question and this question more also. If you have got everything correct or more or less everything correct, please comment. Sir, I got question number 1A correct, 1B correct, 1C also. I am on proper lines. Or you comment after I tell you the last question. Okay. I'll let this thing remain here. Last one. Fixed overheads cost variance. Now, you all are doing fixed overheads variances under absorption costing. It is nothing but absorbed amount minus actual amount. This is how we all do. Now, actual amount of fixed overheads are 1,85,000. What is absorbed amount of fixed overheads? Absorbed depends upon production. Production is 15,560 units. Okay. Now, for every unit, you should have taken how many hours, beta? 5 hours. And rate per hour of fixed overheads is rupees 2 per hour. This will be giving the absorbed amount, no? So, therefore, 15,560 minus 29,400. You have incurred far more. So, therefore, this variance should be adverse. So, answer should be 29,400 over here. Okay. That's it about this particular question. Quite a easy question. Even if you all know the basics of your standard costing, this thing should not have been a problem. Okay, chali, this question is done. Chali guys, question number 1 is altogether done. Now question number 2. Question number 2 comprised of 2 parts. One of them was for 10 marks. This question was on tolls. And the second part is on reapportionment. That is chapter number 4 of overheads. Now, almost this question we all have done. Okay, I'll say the word almost, not completely. This is mixture of 2 questions. One is almost same, and in end you have to be computing the toll, but tolls is different for different type of vehicles that I gave you all in the test series. Okay, so I tell you all many times that I have to be putting some new questions in test series. So those people who have attempted entire test series with us, okay, it is super good for you. Nothing else is compared to be done. Rather than wasting time on listening lectures up and so on, please do whatever has been told to you. Systematic, small things that we all do, but then they help you towards the end. Okay, just do the entire course rather than going here, trying to be finding out all the shortcuts. You try to do the course that we all have drafted for you. You only do that much, the job comes to an end. Okay, listen. XYZ Toll Plaza operates a toll plaza on 100 kilometers highway. Collect the tolls from the vehicles passing the plaza. The company has estimated that every year, a total of 60 lakh vehicles, 60% passenger, 15% commercially heavy vehicles, and the rest are buses. So 60 and 15 is 75. Rest means 25% are buses. Will be using the highway during 15-year toll collection tenure. Okay. 60 lakh vehicles every year divided by 12. So I'm going to be writing 5 lakh vehicles are going to be there every month. Okay. I want per month for some reason. So I'm trying to make that kind of a background from beginning only. Now in that 60% are passengers, 3 lakhs. 15% of commercially heavy vehicles, so 75,000. And rest 25% are buses, so 1,25,000. So therefore this is the breakup. I'll write it once more. Totally 5 lakh vehicles. Out of that, passengers are 60%, 3 lakhs. Then commercial vehicles are 75,000. And buses in this case are nothing but 1,25,000. That is remaining 25%. Okay. I'll rub out this part. Now, there are 30 days in a month. Please note that particular thing. Okay, listen. Total operating cost and the maintenance cost for the month, 30 days in a month are as follows. Acha, one small thing before I'll be starting. We usually say this thing that for a toll company, operating cost statement can be made under 3 heads. First is a capital cost. Capital cost, whatever roads and all you will be making, one-time cost. That you all can amortize it over the tenure of the toll. Okay. That will include interest also, all those things. Okay, that is first. Second, in this case, are your operational costs. Every day, the salaries that you all pay to the toll bull collector, then the electricity cost up and so on. And lastly, it's a maintenance cost to the roads. Okay, you will maintain those roads, no? Okay, so all those particular costs. Okay, so just one small thing. I'm coming to the required part first only. Calculate the total cost per month. So from beginning, I'll try to do everything for 1 month, beta. And 1 month comprise of 30 days. Okay, listen. Personal cost. These will be coming under the head of operational cost. Number of shifts are 3. Number of toll correction personnel per shift are 10. So into 10, these will be the total shifts for which you will be paying. Salary per day per person is 800. So therefore, this will give you the salary per day. You can multiply it by 30 days. So therefore, 7,20,000. This will be there in my statement somewhere. Okay, further. I'll write in red now. That'll be better. Supervisors. Number of supervisors are 2. Number of shifts are 2. There are 3 supervisors like that. You pay them 1,200 rupees into 30 days. So therefore, into 30, 2,16,000. Then, security personnel, number of shifts are 3 into 10. 3 into 10 into, you pay them rupees 500 and 30. $4,50,000. Then toll plaza manager, number of shifts are 2 into 1. Number of managers per shift is 1 only. Salary per day is 2,000. So therefore 2 into 1 into 2,000 into 30. 2 into 2,000 into 30. So 1,20,000. Okay. So first expense, second expense, third expense, fourth. These are all your personal costs. Okay. Further, other annual cost, I'll convert them to monthly cost. That'll be better. 14,40,000 divided by 12 should be 1,20,000. Electricity cost, that'll be coming as part of the operating cost. Telephone and communication cost, 2,40,000 divided by 12. So therefore, that will be 20,000. Maintenance cost, 60 lakhs divided by 12. That will be nothing but 5 lakhs. Depreciation and amortization cost, this is 12 crores. divided, these are annual costs, no, divided by 12, na. So this is 1 crore rupees. This will be part of that capital cost. Okay, further. Insurance and safety cost 15 lakhs divided by 12. So therefore this is 1,25,000. I don't know why I have a feeling that some people have taken these costs like that only for a year. And upper cost those guys have taken for a month. I'm having that feeling. Have you committed that error? You all can put in the comment below. It's okay. 783,48,000 divided by 12. This is interest expense incurred for servicing the term loans. So 65,29,000. Just a sec, 783,48,000 divided by 12. 659.20. Interest expense again should be part of the capital cost. We usually try to take a loan for building the roads, no? So therefore this should be part of the capital cost. Achha, the toll rate per vehicle is to be fixed at heavy vehicles, heavy commercial vehicles, 500% of passenger vehicles. So if for passenger vehicle you all charge X, for heavy commercial vehicles you charge 500% of that. That means 5X. Can I call that thing as Y? That'll be better for me. Sir, Y, just like that only. So if for passenger vehicles I take it up as Y, this thing will become 5Y. For buses, 400% of the toll rate for passenger vehicles. So therefore it will become 4Y. Okay. You are required to calculate the total cost per month for the toll plaza. Assuming that the company aims to achieve 20% profit margin on over total taking. Total takings means revenue, means sales. Calculate the toll rate to be charged for each type of vehicle. Assume 360 days a year. 30 days a month will mean 360 days in a year. Yeah. So that's okay. Now, listen. Operating cost per month. See all these things. Capital cost. There are two of them, no? One is 1 crore. 1 crore rupees was from here. And other is 65,29,000. 65,29,000. This is your capital cost. Then these four costs, beta, 7,20,000, 2,16,000, 7,20,000, 2,16,000. I've shown the calculation over here. 4,50,000, 1,20,000, 4,50,000, 1,20,000. Then electricity, telephone, 1,20,000 and 20,000. 1,20,000 and 20,000. Insurance and safety over here, 1,25,000. 1,25,000. Okay. I've done the total over here. Okay. Can I just verify the total just for my reference? 7,20,000 plus 2,16,000 plus 4,50,000 plus 1,20,000 plus 1,20,000 plus 20,000 plus 1,25,000. Correct. And maintenance cost over here was 60 lakh rupees, no? Okay, so 60 lakhs was for 1 year. We computed that thing to 1 month. So 5 lakh rupees. Okay. So total cost for 1 month is 188 lakhs. That should be your answer to this particular question. Okay. Now, coming over to the second one. Now, those guys want a profit of 20% over the total takings. So, therefore, if total takings are 100, profit will be 20. Total cost will be your balancing figure 80. Please cross multiply. This is the amount of revenue. Please do remember this is the amount of revenue that you all want in 1 month here. So, I'm just going to be writing this figure over here. 235 lakhs. Okay. 235 lakhs. Now, this revenue you are going to be collecting from whom? From the vehicles. So, in 1 month, how many passenger vehicles will be using the tolls? 3 lakhs. And from each of them, we are going to be collecting Y. I told you all Y over here. Okay, from passenger vehicles, we'll be collecting Y. Then, how many commercial vehicles will be there? 75,000. 75,000. Okay. How much we are going to be collecting from them? 5Y, I think. 5Y. Just a sec. Yeah, 5Y for the heavy way. And then how many buses will be there, beta? 1,25,000. Okay, so 1,25,000. 1,25,000. We are going to be collecting from them 4Y ka toll. Okay, 4Y. 4Y is over here. 4Y. Okay, I guess this is the equation that I have made over here also. See this equation. 235 lakhs is equal to this plus this plus this. That's it. You all can solve it. Y will be rupees 20 for a passenger vehicle. For commercial vehicles, 100. For buses, it will become 80. That is 5Y and 4Y. So, therefore, these three should have been your answers. Okay, chali. That's it about this entire question. We all have done question like this. Should not have been a worry for you all. Okay, chali, done. Chale, we'll start away with question number 2b. Only reapportionment is to be done. Only reapportionment, nothing else. It's a question on overheads. Of course, there in your books also. Okay, and only reapportionment is to be done. No allocation, no apportionment. A factory has 3 production departments, P1, P2 and P3, and 2 service departments, S1 and S2. Both the service departments are independent and provide services to each other. If they provide services to each other, you will be following reciprocal method, also called as repeated distribution method. Following are the details of the expenses of each service department. Okay. S1's own expense is 1,60,000, S2's own expense is 2,40,000. Further, the expenses of S1 and S2 are apportioned as follows. So, divide the expense of S1 among the other departments in the ratio of 25:35 is to 20 is to 20. So 20 plus 20, 40, 40 plus 60, 100. Okay. Then divide the expense of S2 among the other departments in the ratio of, what happens over here? In the ratio of 35 is to 30 is to 25 is to 10. You are required to apportion the expenses of the departments S1 and S2 to the production departments P1, P2 and P3 using simultaneous equation method. Now recall your simultaneous equation method. See, let the total overheads of S1 be X. Let the total overheads of S2 department be Y. Now think like this. S1's total expense will be its own expense. S2's total expense will be its own expense plus whatever it gets from the other department. Please do remember, S1 gives 20% to Y. I'm not looking for that. But it takes 10% from Y. So S1's total cost will be its own cost plus 10% of S2's cost. 10% means 0.1. 0.1 Y. Y is the total cost of S2 department. Same way, S2's total cost will be its own cost plus whatever he'll be getting from S2. Plus whatever he'll be getting from S1. Okay. So he'll be getting how much from S1? He'll be getting 20%. No, because this was a bifurcation of 20%. So therefore, this will be 0.2y. That's it. The job is done with this. These two equations I have tried to put over here. See over here. This is the first equation. This is the second equation. Once you all do that, try to be solving it. Sir, how to solve such equations? Simple it is. Y is this. Instead of this y, you put this entire equation. That is whatever I have done in the next step. So therefore, x is equal to, see over here, 1,60,000 plus 0.1. Instead of y, I have put this entire thing. You all start to be solving it. So open the brackets. Get your answer of x. So your x answer comes to 187,755. Once you get x answer, put that answer over here and get your answer of y, please. So therefore, y comes to 277,551. If you only did till here, I will not be surprised if you'll be getting 0 marks because job was not this. Job was the reapportionment. So do the reapportionment, no? So let's try to be doing the reapportionment. Now see. When you do reapportionment, something like this. First of all, expenses 1,60,000, 2,40,000. Okay. So I'll rub out all these particular things. So therefore, 1,60,000, 2,40,000. So own cost in this case, this is after doing allocation and apportionment might be. Okay. Because this was directly there in the question. Now try to be doing reapportionment. S1's total cost was this figure. S2 total cost was this particular figure. So therefore, this cost you reduce from here, divide that among the other departments in this ratio. This and this. That is whatever I have written over here. Okay. And take S2. S2's cost is how much beta? 277,551. That you reduce from obviously S2 and divide that among the other departments in the ratio of 35, 30, 25 and 10. So 35, 30, 25 and 10. Once you all do that, that's it. Your reapportionment is over. And if you all remember, I have told you all this thing also. Your reapportionment is deemed to be correct if after reapportionment, these two costs become nil. Okay, you all can check it up on your calci that these costs become nil. So therefore, this is the reapportionment that we all have done as such. Okay. if you would have made equations reverse, this would not have come to nil also. You would have realized that your answer is wrong. Okay. So that's it about this question. Chali. So till now the paper has been quite simple. You all can comment that till now we all have done 30 marks plus 14 marks plus 14 marks. So till now we all have done 58 marks. Now whatever we all have done till now, to be very honest, it will take around 1 hour and 15 minutes for you all to be reaching till here. And till now paper is simple, so getting 58 upon 58 should not have been a very difficult task. Okay. That's it. Chalo, let's discuss the next question now. Chale guys, question number 3A. Now, this is always a sure short question. You all are well aware of that, activity based costing. Now, there was a similar question on banks that we all had done. Okay, not a very tough one. All the cost drivers, everything was given. You just have to be doing the calculations and nothing else. Yeah, let's do it. A consultancy firm provides project management services in 3 sectors. You have technology, healthcare, and education. So therefore, these are kind of your 3 products. Okay, we are not a manufacturing company. We are there in service sectors. Okay, so we do project management services for these 3 kind of sectors. The project management service covers development and implementation of the software for various management information system (MIS) requirements for its clients. So those guys develop the software. The fees charged per project are as follows. So whenever we develop softwares, we charge this much fees. Technology, we charge 90,000 rupees per project. Healthcare and education, we charge this much. Obviously, these are nothing but the revenue or the fees. Okay, per project, we all charge this much. Okay, this is about revenues. The company uses activity-based costing to allocate its overhead cost. For the month of August 2025, the following informations are provided. Service sector, technology, healthcare, education. Number of projects, 20, 10 and 10. Software development hours, 10,000, 7,000 and 5,000. So number of projects, we are working on 20 projects for technology, 10 for healthcare, 10 for education. Software development hours, 10,000, 7,000, 5,000. Consulting hours, 6,000, 5,600 and 2,000. Number of client meetings, 30, 20 and 40. Okay. Other cost and activities. Now see, there are 4 activities over here. Management of projects, its cost is 8,10,000. Number of projects are given over here. So this is the total cost, obviously to be apportioned among your 3 kinds of sectors where you will do it. So therefore, number of projects are 20 is to 10 is to 10. Then, consulting service delivery, its cost is 4,20,000. Its cost driver will be consulting hours. Consulting hours are over here. 6,400 is to 5,600 is to 2,000. Okay, then client interaction and meetings, its cost is 6,30,000. Okay, number of client meetings is supposed to be the cost driver. So 30 is to 20 is to 40. Lastly, admin and support, 15,40,000. It will be getting divided in the ratio of software development hours. Software development hours are over here. So 10,000 is to 7,000 is to 5,000. Prepare a statement showing total cost and per project cost of project management services for each sector, technology, healthcare and education, using ABC approach. Okay. Identify the most profitable sector based upon, read this properly, profitability percentage on fees charged. Okay. Profitability percentage on fees charged. Fine. So in end, you got to be finding out the profit as a percentage of fees, and wherever that thing is there, that sector is most profitable. Okay. Now, simple it is. See, if you want to be following activity based costing, which columns we all prepare? If you all remember, which columns? First one is nothing but activities. Okay. Second is nothing but the cost of each activity. You have 4 activities. Just for writing, I'm calling them as A1, A2, A3, A4. So therefore, there will be 4 activities over here. A1, A2, A3 and A4. Okay. Cost is given to you over here. Then third one, cost driver is given to you over here. Okay. Cost driver, you have the figures also that I told you. And then you have cost driver rate. Okay. And then you all have cost objects. There are 3 cost objects, beta, or 3 products that you all have: technology, healthcare and education. Okay. Exactly all these columns I've already prepared over here. So therefore over here, activities, 4 activities, their cost is given to you in the question, cost driver is given to you in the question, okay, and these are the numbers of cost drivers, okay, that we spoke about right now, okay. Then see, 8,10,000 is a cost for how many projects, beta? 40. You divide, no? 20,250 is the cost driver rate per project. 4,20,000 is a cost for this plus this plus this total consulting hours. You will divide it. Okay. So 4,20,000 divided by the total of this will give you cost per consulting hour. Then client interactions and meeting. This is a total cost incurred for 30 plus 20 plus 40. That is 90 client meetings. So therefore this will give you cost per client meeting. Software development hours. This is a cost for 10,000 plus 7,000 plus 5,000. That is nothing but 22,000 software development hours. You all can divide. That will give you rupees 70 per software development hour. Once you all do that, you just have to try to multiply the thing. So therefore, 20,250 is the cost per project. Multiply by 20, 10, 10. Multiply 30 by this, multiply this by this, multiply 70 by this and this. The moment you all do that, all the bifurcations are over here with you. Okay. So this is the total cost for each and every sector. Divide by the number of projects that you all have taken over here. This will give you cost per project. Okay. Fees per project. See, this ends your part first of the question. Your part first was over here, showing the total cost and per project cost. So therefore, I got total cost over here. I got per project cost over here. Okay. And then you got to be finding out profitability also. So therefore, from here, I subtract the fees. Fees per project is over here. You subtract, that will be giving you all profit per project. And then for finding out which is their top performing sector now, what do these guys do? They find out profit as a percentage of fees. So therefore, this figure divided by this figure into 100 comes to 16.28. 16.63 and 18.86. So based upon this, I guess last sector is most profitable. That is education sector. That is whatever I've written over here. Okay. So therefore, these are your final answers. So you can check. This should have been your final answers as such. Okay. Easy question. This was a gift of activity-based costing to you all. All those people who have even solved 3 or 4 questions of activity-based costing, no, you all should have been able to be doing this. Okay. Chale, this question is done. Chale guys, we'll start away with question number 3B, 6 marks question, but on CVP analysis limiting factors. Okay, let's start off with the question. SM Limited is a manufacturer of 2 products, A and B. The following particulars are extracted from the records of the company. Maximum capacity 5,000, 3,500. Okay. Selling price 1,000 and 1,500. Okay. Cost per unit. Raw material rupees 20 per kg. Rupees 200 and rupees 400. Now from here I am writing some data. 200 upon 20. So therefore it must be requiring 10 kgs. 400 upon 20. It must be requiring 20 kgs. Next. Wages at the rate of 10 per hour rupees 150. So therefore it must be requiring 15 hours. 100 upon 10. It must be requiring 10 hours. Direct expenses okay, variable overheads okay. So what I am saying, I guess this heading should have been variable cost per unit. Why? This is a variable cost, this is a variable cost, this is a variable cost, this is a variable cost. The total fixed production, the total fixed overheads for product A is 2,50,000 and for product B is 3,50,000. So total is going to be 6 lakhs, correct? Further, the company manufactures both the products using same grade of material. Okay. Further, the company is facing a constraint of raw material which is available in limited quantities of 1,10,000 kgs only. So mostly raw material should be a limiting factor and you only have 1,10,000 kgs. In any case, it is a limiting factor or not, we all will test also. Determine the optimum mix considering material as a limiting factor. Chalo, those guys have told also. To generate maximum profit and calculate the maximum profit. So you have to determine optimum mix, means how much of each product should be made and sold. Okay. And also try to find out that highest profit. Okay. So let's do it. Now, just for time pass, first of all, what I have done, I have calculated 10 and 20 kgs information over here. Okay, second, this is for time pass I have done. I've just tried to make it a point to check that it is a limiting factor or not. See, 5,000 units into 10 kgs, so 50,000. 3,500 into 20 kgs, that is 70,000. So in all, if you have to manufacture everything, you require 1,20,000 kgs. But you have only how much beta? 1,10,000. So can we say material is a limiting factor? Okay. Now, if material is a limiting factor, sir, then what to do? Then you cannot produce everything of everything, no? Yes, sir. So then what to do? Then try to produce that product first that uses your raw material to the best. Sir, what does that mean? It means that try to produce that product first that earns highest for you per kg of raw material. Earns means contribution, or what else? Okay. So therefore, our ranks will be based upon contribution per kg. That is whatever I have tried to do over here. Calculation of contribution per kg of raw material and try to give rankings over here. So therefore, we have tried to be finding out contribution per kg of raw material. Okay. Sir, how do you find out contribution per kg? First of all, find out contribution per unit. Selling price minus all your variable cost will give you contribution per unit. Okay. Now, if I start to work it out, see over here, I've done that particular work. Okay. Selling price minus your 4 variable costs, that will be giving you all contribution per unit. But you don't want contribution per unit. You want contribution per kg. So therefore, try to be thinking the next thing. To earn 370 rupees, you're using your raw material. What is the quantity of raw material that you are using for 1 unit? 10 kgs. Over there, how much? 20 kgs. So therefore, contribution per kg of raw material is nothing but 37 rupees over here and 29 over here. So which product uses your raw material to the best? Sir, it is product A, correct, because it has 37, which is higher than 29, no? So therefore, this is rank 1, this is rank 2. Now, based upon these ranks, we try to be doing the production. Okay. So we try to do the production means what? Whatever A you have to be producing, produce A first. Then whatever is left, you try to give it off to your next best product, that is B over here. Okay, so therefore see what I have done over here. Product A is there, product B is there, rank 1, rank 2 is there. Okay. So first of all, for A, how many maximum units? A is a first rank product. No, we start with A only. So therefore, produce 5,000 units. So therefore, 5,000 units at the rate of 10 kgs per unit will be making it 50,000. Okay. So 50,000 kgs will be given to A over here. Okay. Total was 1,10,000. So therefore, balancing figure will be given to B, that is 60,000. 60,000 kgs we allocate to B. 20 kgs are required for 1 unit. So from 60,000 divided by 20, you will be able to produce 3,000 units. This is your best product mix. If you produce 5,000 units of A and if you produce 3,000 units of B, you will be able to generate highest profit. Okay. And let's compute that profit also. This is number of units multiplied by contribution per unit. Okay, that'll give you total contribution. Okay. Once you get your total contribution, less your fixed cost. Fixed cost over here was 2.5 lakhs and 3,50,000. Okay, so total will be amounting to 6 lakhs. Subtract, this is the highest possible profit. There is no other bifurcation of 1,10,000 that will be able to get you highest amount of profit as such. Okay, this is the best bifurcation that is there. So 2 answers. Your best product mix is 5,000 and 3,000. And second, the maximum amount of profit will be 29,90,000. Easy question. We all did, I guess, 2 or 3 questions on limiting factors. Okay, I guess this is as simple as anything it can be getting. In fact, in one of the questions that we all did, you will have the references also, I think, before. So we had done exactly same kind of a question whereby raw material was a limiting factor and exactly we calculated the things in that way. In fact, over there were 3 products. Over here, there are only 2 products. So therefore, job also gets done faster. Okay, chali. This question is altogether done. Chali, question number 4A, budgetary control. Ditto same question. We all have like this time actually every question is same only here. So let's start it off. In this, there is slightly a new part, but the easier part of machine hours also. Let's read it. SVS Limited manufactures a single product A1. The company has estimated its quarter-wise sales for the next year is as follows. So in quarter 1, they'll be selling 72,000 units. In quarter 2, 90,000. Quarter 3, 99. Quarter 4, 1,08,000. Okay. In the beginning of the year, the opening stock of finished goods was 14,400 units. I'll be able to test this number after some time. And is expected to maintain closing stock of 29,400 at the end of the year. Keep this data in mind, please. I'll not be able to test this, but this is information for you all. The production pattern in each quarter is based upon 80% of the sales of the current quarter and 20% of the sales of the next quarter. Okay. Now, this line, so what these guys do, their production is based upon whatever is the sales in the current quarter, they do 80% production of that. And whatever is the sales in the next quarter, they do 20% of that also. Example, if I'll tell you, this much is supposed to be sold in the 2 quarters. But in quarter 1, how much they will be producing? 80% of 72,000 plus 20% of 90,000. That is whatever those guys will be producing in quarter 1. Okay. Similarly, in quarter 2, how much they will be producing? 80% of this plus 20% of this, so on and so forth. Now, if you try to think this, then you will understand the next line is not required. The company maintains this 20% of sales of the next quarter as a closing stock of the current quarter. That will happen only. See, what would have happened? Quarter 1 sales will be 72,000. Okay. Do into 20%. This much would have been produced in the previous quarter, but it will get sold in the current quarter. So therefore, it will appear as closing stock, no? So 72,000 into 20% is 14,400. That is why this figure is 14,400. This is the same adjustment that we also had, but just I thought I'll brief you all up. Okay, further. The opening stock of raw material in the beginning of the year is 24,000 kgs and the closing stock at the end of the year is maintained at 12,000 kgs. Okay, so these are the stocks of raw material. Each unit of finished goods required 2 kgs of raw material. Fine. The production time required to produce 1 unit of A1 is 5 hours. Okay. During the production, the product uses 2 machines as under. So, just one sec. To produce 1 unit of A1, we require 5 hours. This 5 hours detail is also here. During the production, the product uses machines as under. Product A1, machine A needs 2 hours to work on product A1. Machine B needs 3 hours. So, in all, this 5 hours comes over here. Okay, so therefore, this data is over here. Further. Now, this adjustment, this is new, but then it's very easy. Machine A requires 100 hours of maintenance after the use of 5,000 hours. And machine B requires 100 hours of maintenance after the use of 3,000 hours. I think it should be interpreted as after every 5,000 hours of use, machines requires 100 hours of maintenance. And over here, after use of 3,000 hours, 100 hours of maintenance is needed. After each 5,000 and 3,000 hours of usage of machine A and B, we require 100 hours of maintenance. Okay, prepare quarter-wise production budget in units and raw material consumption budget in quantity for the next year. They don't require raw material purchase budget. In our question, we had raw material purchase budget also. We had consumption budget also. But over here, only consumption budget and production budget is asked. See, even if consumption budget was not asked, no, you have to be making. Why? Consumption happens whenever you produce, but we don't have the production, we have sales. So from sales, find out the production and then in that case, try to find out consumption. Okay, now see, production, I've already told you this particular thing. First of all, what I have done, I've copied down the sales over here. Okay, see my sales over here. Quantity to be sold. Okay, but quantity to be produced, 80% of this figure, 20% of this figure, total it up. Then for quarter 2, 80% of this figure plus 20% of this figure will be over here. So 91,800. Acha, in quarter 3, 80% of 99,000 plus 20% of 1,08,000. Okay, so therefore we'll be producing 1,08,000. Most important. Quarter 4, 1,08,000 is supposed to be the sales in units, 80% of that and 20% of the next quarter. Somebody can be saying, sir, next quarter details are not there. But that 20% will be nothing but closing stock for you. Whatever is a closing stock of quarter 4, that itself will be representing 20% of next quarter. No? So therefore, this 29,400 comes from your textbook over here. Okay. This was nothing but given to you right in the question. This is not calculated as such. Okay. So therefore, find out the production for each and every quarter. We all did that figure. Okay. Total is 3,84,000. Okay. Now those guys also want raw material consumption budget. So see in the question, for every unit of your product that you all produce, you require 2 kgs. So therefore, we take this information, multiply by 2 kgs. This will giving you all consumption. So therefore, this is a consumption in each and every quarter. You can total it up. That will be coming to 7,68,000. Okay, now see. One last thing. Listen. Part 2. Calculate the total number of machine hours, including maintenance time, required during the year for machine A and machine B to manufacture product A1. Now, before I'll be doing that, I want that you all read this line in a proper way. And what is this line? Machine A requires 100 hours of maintenance after use of 5,000 hours. So after 5,000 hours, 100 hours are needed for maintenance. Machine B requires 100 hours of maintenance after the use of 3,000 hours. Let me talk of machine A. Let me ask you. After the first 5,000 hours, 100 hours of maintenance will be needed. Tell me one thing. If 10,000 hours are there, then 200 hours of maintenance will be needed. Let me ask you this last question. If 16,000 hours are there, how many hours are needed? What you will be doing? Sir, 16,000 divided by 5,000, 3.2. 3.2. See, if it is 16,000, after first 5,000, one maintenance. After 10,000, one maintenance. After one more of 5,000, one more maintenance. So 3 maintenances will be required. For that extra 1,000, what do you think? How many hours of maintenance will be needed? Should we do completely to proportionate? So if those guys will ask me 16,000 hours, how many hours of maintenance will be needed? I'll be thinking 16,000 upon 5,000 is 3.2. That means 3 complete cycles, no? So 3 times maintenance will be needed for sure. About that 0.2, you all keep on thinking. I will have my diverse views on that. Okay, now see. So let's compute. See, machine hours are required for production. You have your production over here, 3,84,000, correct? So in this case, no, listen. 3,84,000. Now listen to me very carefully. I took 3,84,000 over here. 1 unit of product A1 requires 2 hours over here, 3 hours over here. So multiply by 2 and 3. Multiply by 2 hours per unit, 3 hours per unit. This will be giving you all Roman number 1 answer. 7,68,000 and 11,52,000. Okay, now see. What I thought, I will divide this data by 5,000 and 3,000. Let me complete machine B first completely for you because that is very easy. 11,52,000 machine B hours will be working. After every 3,000 hours, we require a maintenance of 100 hours. So therefore, divide by 3,000. 384 times maintenance will be coming. And for every maintenance, 100 hours will be needed. So 384. 11,52,000 divided by 3,000 is 384. 384 times maintenance will be needed. And each time maintenance is done, it takes 100 hours. So 38,400. So therefore, 11,52,000 plus 38,400. 11,52,000 plus 38,400 will be giving you this particular answer. Machine B is altogether done. But machine A, listen to me. Okay, listen to me very carefully now. Listen. See. Machine A. Machine A, 7,68,000 hours will be needed. Now, 7,68,000, pick up your calci. Let's divide it by 5,000. So, therefore, maintenance will be needed 153.6 times for sure. Now, 153.6, can we say maintenance is done at the end of each and every cycle? After first 5,000 hours are over, then maintenance is done. So 153 times it will be done for sure. That is why I have rounded off 153.6 into 153. Because 153 complete maintenance hours will be there. I multiply it by 100, 15,300. This will be your Roman number 2. So 7,68,000 plus 15,300. This will give you 783,300. Although I am not sure what ICAI will do. ICAI, small probability they might take 153.6 only. I do not have a problem with that. Please do that. Okay. Or those guys can be saying ultimately that complete cycle of 5,000 will happen sometimes, no, for sure. So therefore that time include that also. So they might take it up as 154 also. As per me, it should be 153. But I think ICA can be taking any of those answers. Okay. So therefore, these are the number of machine hours. And your production budget and consumption budget was over here. Okay, that's it for this entire question. If you have any doubt regarding the explanation that I've given, you all can comment below, I'll reply. Okay, chale, this question is done. Chale guys, question number 4B. This is on chapter number 7, cost accounting system. Only entries are to be passed, nothing else. Only entries, no accounts have and so on. Let's do it. Sundar Limited maintains its cost accounting system on the base of non-integral system, non-integral. Okay. So GLA account will be coming of accounting. The following transactions arose during the month of August 2025. Now, before I read these transactions, read the required part. Journalize the above mentioned transaction in the costing books maintained on non-integral system of accounting. Okay. So you have to just journalize, just pass the journal entries. Now narration I have not written. In case you all want, you all can write it. That's okay. You all are now big enough. Materials purchased on credit. Okay. You purchase the raw materials. Raw materials are coming in SLC account debit to cash bank or to creditors. But instead of that, your GLA account will be coming. Okay. Your first adjustment. SLC account debit to GLA account. Second, materials issued to production direct. Materials issued to production. Production means WIP account. So therefore, materials are coming into the factory. So therefore, WIP account debit to who is sending that material? Storehouse. So therefore, to SLC account. That is your second entry. Third, direct wages allocated to production. Production happens in factory. Factory means WIP account. Recall that on WIP account debit side, beta 4 expenses should come. Direct material, direct labor, direct expense and factory overheads. So direct labor also has to be coming now. It comes from wage control account, you all remember. So therefore, direct wages allocated to production. Production means factory. Factory means WIP account. And who is sending it? Wage control account. First of all, expenses get recorded in wage control. From there, it is charged to production. So therefore, 3 lakh rupees. Next to be careful. Acha, wait. My third entry, WIP account debit to wage control account. Fourth, factory overheads over-absorbed. One sec. If I'll ever try to make a factory overheads account in short like this, over here, actual amount comes on the debit side. So therefore, to cash bank or depreciation. Okay. In any case, that will mean to GLA. On the credit side, amount absorbed comes. Okay. So therefore, absorbed amount goes to WIP. Over here, under absorption comes. Over here, under absorption comes. Under absorption. Yeah. So over here, under absorption comes. I'll write down UA means under absorption. If ever it is over here, it is over absorption. So it is written factory overheads over absorbed. Over absorbed means balancing figure will be over here. Okay. So therefore, if the balancing figure will be over here, I guess factory overheads account will get debited. And where will over absorption go? You can transfer it to costing P&L account. You can transfer it in this case to cost of sales account. Anything is okay. So therefore, entry will be FOH account debit. FOH account debit to costing P&L or cost of sales. That is whatever I must have written below over here. Factory overheads account debit to cost of sales or costing P&L account. Anything is okay. See the next one. Administration overheads under absorbed. Now exactly the same thing. Admin, although in case of admin, this goes to your finished goods, not to your WIP. But that is not our concern. It is only under absorbed. Under absorbed means it will be over here. So therefore, now your entry will be reverse. Reverse means it will be costing P&L account or cost of sales account debit. Okay, to administration overheads control account. Okay, because the balancing figure will be appearing over here. That is whatever I must have written over here. Cost of sales or costing P&L account debit 1,40,000 to administration overheads control account. I guess 5 marks, 5 entries, 1 mark for each. You all can try to tell me how many marks you will be getting in this part. Okay, chalo. Done. Small questions, I guess. This time, I think so most of the people would have completed their question paper. This is one common complaint that remains with costing and FM. So paper does not get over. But I think so that this time most of the people must have completed. Chali, done. Chale guys, we'll start away with question number 5A. This is on ABC system. Of course, not activity based costing, but category A, category B, category C. If you'll remember, the questions that we all did in class were all like this, whereby category A 70% in terms of value, 10% in terms of number, category B to 2020, category C 10% in terms of value and 70% in terms of number. Basically, ABC tells us which stocks are important, which are not. Now, over here, they have given you a categorization that try to categorize based upon these kind of conditions. We will exactly follow whatever the sum says. That is first thing. Second thing, a similar question like this was kept in a homework section. That is why I always tell you, please do the homework section. So therefore, you are prepared for every damn thing. Let's start. TS Limited is suffering from material deterioration and finds out that their valuable stocks are not properly stored. The company furnishes the following information. Serial number 1, 2, 3, 4, 5, 6, 7, 8. Material A. Material name MA, MB, MC, blah, blah, blah. Units. Okay. Total cost. Okay. The storekeeper of the company argues that he has taken proper care in storing 3 types of raw material. MB, MA, MB and MC. In bulk quantities. If you all try to be seeing, these are more in bulk as compared to all of them. He further argues that only few units of Mg and Mh have been deteriorated due to bad weather. Okay, fine. The management of TS wants to get him aware about value of different items. Rank the materials and draw a plan of selective control by using following basis of selective control. Rupees 50,000 and above, category A items. 15,000 to 50,000 B. And then below 15,000, that will be C. Those guys, so forget about that 80-20 rule. Okay, forget it. Okay, 70, 20 and 10. Forget about that rule. Those guys have told. Wherever stock values is 50,000 and above, it will be category A. So try to be thinking, this is category A because cost is above 50,000. Over here also, this is A, this is A. I guess in that, this is first rank, this is second rank, this is third rank. Okay. Then, in category B, you will be having this and this. This you can be calling as fourth rank, this you will be calling as fifth rank. 15 to 50,000. These two come into that, no? These 3 are above 50,000 category A. These are 15 to 50,000 category B. And then this is category C, category C, category C. So therefore, this is 6, this is 7 and this is 8. Okay, that's it. So that is whatever I must have done over here. And you accordingly try to be doing the chart. So rank 1 to 8, I've also done. Category A. 3 items come in category A. I've written their names also over here. 2 things come in category B and 3 things come in category C. Now, few things I have written extra but not required in exams. Just I thought that I'll refresh it. Category A stocks, you require very strict control, mainly from the top management. Try to review these items quite frequently because they are expensive. Keep the storage quite secured. Okay, there should be permissions to access these kind of materials. And there should be access from the senior management. Some authorization should be coming from the senior management that you can try to use these raw materials for the production because these raw materials are expensive. Something will happen, it's a problem. Over here, moderate control, periodic checks, not much. Okay, checks will mean could be the physical counting or whether the quality has gone bad or not. Okay, standard storage. C, simple controls for category C stocks. Basic record, these stocks are not very expensive. So basic records will do. And bulk handling is Excel. You might not be recording issue of each and everything. Even in bulk, if you try to pass consolidated entry, it's okay. Even if some items are lost, is okay. In any case, the value is quite less as such. Okay. I guess ICAI has given you all free marks over here. As per me, I think this question was asked for 14 minus. This question was asked for 8 marks. I guess over here it is not printed. If there is anything that is not getting highlighted here, don't worry. It will be there in the PDF for sure. That the link of that will be over here. Okay. Chali. So this question is altogether over. Nothing to do here in this case. Just you have to try to rank the things. And what is category A, what is B, what is C. That in any case we all did. Okay, so these 3 stocks come in category A. These 2 stocks come in category B. These 3 stocks come in category C. Okay. Chali, that's it. Chali, question number 5B, material costing. Now, usually material costing is given a lot of importance. In this paper, no. One question they all put of ABC analysis that we just now did. Very easy one, to be very honest. Even if you don't know what is ABC, you would have solved that question here because the rules were given to you. Another question just like that. Okay, no complexity, no nothing. Directly just solve it. A company manufactures electronic gadgets and uses a specialized component. The company incurs an ordering cost of 1250 per order. So therefore, in our symbols, this is CA. I've written that thing over here. Okay, CA is ordering cost per order. The carrying cost for storing the specialized component is 25 per unit per annum. So therefore, this figure is CI. I've written that thing over here. The company's annual production is 90,000 gadgets, and each gadget requires one component for assembly. So therefore, you are going to be making 90,000 units of finished goods. For each and every unit, 1 unit of this component is required. So therefore, for producing 90, you require 90,000 gadgets. Okay. Is there any stock of gadgets given? No. So therefore, quantity consumed will be equal to quantity purchased, and hence A is also equal to 90,000 units. Okay. You are required to calculate economic order quantity. EOQ is square root of 2A CA upon CI. You will have A, you will have CA, you will have CI. Apply the formula. Square root of 2 into 90,000 to 1250 divided by 25. EOQ is 3,000 units. So therefore, at one moment of time, I order 3,000 units at one time from the supplier. That is first answer. Second, number of orders to be placed in a year. Okay. In the entire year, you are going to be purchasing 90,000 units. Each time you place an order for 3,000 units. So therefore, you place 30 orders per year. That is whatever is the answer over here. Okay, so number of orders per year is equal to A divided by Q is equal to 90,000 upon 3,000 is equal to 30 orders per year. Okay, that's it. Too simple. There's nothing for me to be explaining here. Okay, this is similar to might be the first question that you will have done on EOQ here. Okay, chali, done. Chali, question number 5C. I like this question for the way it is made, although it is almost like, it has the same reference question that we all have done in MCQs also. Okay, it is belonging to the chapter of overheads. Complete the table regarding accounting entries pertaining to under and over absorption of overheads. Absorption of overheads, under absorption, over absorption, under absorption. Account, stock of finished goods, stock of semi-finished goods, that means WIP, cost of sales account. Debit or credit, calculation of the amount formula. Honestly, most of the people would not have even understood what these guys want in the question. Okay. Now, think like this. If I'll make a cost sheet over here, this is amount, this is per unit. Okay. Direct material, direct labor, direct expenses, prime cost. Okay. Add factory overheads. First amount that always comes in your books of accounts is which amount, beta? Absorbed amount. And then we start to be thinking how to treat under or over absorption. That is whatever is the question also. Okay, but just wait. I'm writing in black first, then I'll be writing in red. This will be giving you all a gross factory cost. Then there will be closing stock of WIP. Okay. This will be giving you all net factory cost. Then suppose there is no admin related to production. There will be closing stock of finished goods and this will be giving you COGS. Okay. And then in that case, all other things, admin and S&D, all those things will become. Okay. Think that there was under absorption. Okay. And you are following supplementary method. Now I'm going to be writing something in red now. Okay. Can we say there will be under absorption if you follow supplementary method? Something will come over here. That something will be nothing but under absorption. What does supplementary method say, beta? Supplementary method says wherever absorbed amount goes, transfer under and over absorption over there only. So can we say finished goods closing stock? This amount would already be there. This amount will already be there in your books of accounts, correct? In your finished goods, this particular figure must be there only. Now, try to think like this, Okay, try to think like this. If I want, I can make account also for you and tell you. If suppose like, this is your factory overheads account. Okay. On this side, it will be cash, bank or depreciation or to GLA. Over here, absorbed amount will be going to your WIP. And then there is under absorption. If you ever follow supplementary method, this amount will also go to WIP. And then from WIP, it will go further to finished goods up and so on. Okay. Can you say WIP is a real account, is a stock account. It will have a debit balance. Finished goods is a real account. It will have debit balance. Okay, see. Now, based upon these black figures, closing stock would have already been valued. Okay. Based upon these black figures, closing stock would already have been valued. There must be some figure over here. Okay. Whatever is that figure, that I'm not interested also. But based upon prime cost and this particular thing, you must have valued, in this case, your finished goods stock. Okay. Now, what happened was, you thought, sir, I will follow supplementary method. So therefore, you added over here some under absorption. Can we say if you add something over here, something will get added over here also. And something will get added over here also. Correct? No? Out of this, something will come over here, something will come over here. Balance will get added to COGS. No? It's common sense. If you put something in the pipeline, the things will be going down, right? Now, if you add that under absorption over here, part of that will go to WIP, part of that will go to finished goods, and the remaining will be getting transferred to COGS, which ultimately will be going to cost of sales. How do you determine this amount? How do you determine this amount? How do you determine this amount? Let's find out supplementary rate. Okay. How do you find out supplementary rate? Can I write over here with some other color? Blue color. Chalo. Supplementary rate, we all find it up as under or over absorption divided by total quantity. Total quantity will mean quantity sold plus closing stock of finished goods. This will give you actually quantity produced plus quantity produced of WIP. Okay. But if you'll remember, this will be equivalent quantity. You will have to convert the WIP in terms of completed units. You find out that supplementary rate. Now, suppose in this case, suppose that supplementary rate in this case comes to ₹1 per unit. That is, I took this particular figure. I divided it, came to ₹1 per unit. It means that wherever you have charged this absorption rate, charge ₹1 more. So therefore, ₹1 you will be writing over here. ₹1 you will be adding over here. ₹1 you will be adding over here. ₹1 you will be adding over here. Now, exactly the same thing you all think, and this question is over. If it is under absorption, okay, you will add something, no? Because you have to convert absorbed amount into actual amount. So therefore, finished goods already have a debit balance. You want to increase it. So therefore, debit more. Okay. Calculation of the amount formula. First of all, compute supplementary rate. So therefore, this is the formula for supplementary rate. Okay. So I'm going to be writing over here supplementary rate. But you can be, instead of the word supplementary rate, you can write down this complete formula also. Okay, that is okay. Supplementary rate into, obviously, closing stock of finished goods quantity. Okay, that is how that amount will be increasing. Second, if it is over absorption, then in supplementary rate, you will be using that over absorption. Okay. So therefore, supplementary rate over here, the formula will be over absorption divided by quantity sold of finished goods plus closing stock of finished goods plus quantity produced of WIP, of course the equivalent units, into closing stock of WIP quantity. What else? But then do remember, this is over absorption. So therefore, after over absorption, beta, this amount will be coming in brackets, no? So therefore, WIP stock will get reduced. So therefore, WIP usually have a debit balance. If you want to reduce it, then you credit it. Acha, then under absorption, okay, cost of sales account. How much will get transferred to cost of sales account? Supplementary rate will be this only, under absorption, because in this question it is under absorption, no? Okay, under absorption divided by all those particular things, okay, into, of course, this will be nothing but quantity sold of finished goods, okay, and cost of sales has a debit balance. You want to increase it, no? So therefore, debit. Instead of supplementary rate, if you want everywhere, you can be writing the formula of supplementary rate. If it is under absorption, it will be under absorption divided by the total of these three. If it is over absorption, it will be over absorption divided by the total of these three. That is what I've written over here. See, debit balance, credit balance, and again, debit balance, credit balance, again a debit balance. Okay. And over here, I've written the formulas for supplementary rate. Okay. Over here, formula for supplementary rate is same because it is under absorption. Okay. Over here, it is different because it is over absorption. That's the only difference between both of them. Okay. So therefore, I put a double asterisk over here. Over here, you have to see the impact on finished goods stock. So therefore, multiply by closing stock of finished goods. Here, WIP. So multiply by closing stock of WIP. Over here, cost of sale. So multiplied by quantity sold of finished goods. Okay. You should have written this. I really think many people would not have understood only this. We all did around 2 questions whereby we exactly did this particular thing only. In fact, in your books, if you all see, in question number 7, I guess, okay, of your this textbook, I've written that formula also, how to be computing that supplementary rate. This is that formula if you all try to be seeing. Although it's not required, but in case it is needed, then you write down. Okay, so therefore, you all do this, you should be getting your 3 marks, I guess 1 mark for all. Okay. You all can tell me in the comments whether you got this question correct or not. I think some people would not have got it, but in case you have got, then good one. Okay, chalo, done. Chale, we come out to our last section, question number 6, that is theory, and this is also where I try to be ending. You all know that I don't try to be discussing the theory. It will be there in the PDF. Okay, so the PDF will be available to you all. You all can contact us on Telegram ID @AJNext, and please send your name, telephone number, and the attempt that you have given or you will be giving. And the moment you all do that, the link of the PDF will be sent to you, and you all can access the complete thing. Okay, that's it from my side. Just one thing, and this is very important, okay, for the future generations. I've already put all my lectures of costing of my previous batch of CA Inter in Hindi English mode. Okay, that is one thing that I've completely done, is there on our YouTube channel, but better you access them from our website www.ajnext.com. If you face any difficulty over there on our website, okay, you all can contact us on 8080324444. Every lecture completely free. We don't charge a penny also. We give you the free soft copy. We give you the test. What else you all want here? We have started the same trend now for complete lectures in full English mode also. Full English mode. Okay. So those lectures are coming on YouTube. Okay. Once all the lectures will be done on YouTube, we'll be putting them on our website also. Okay. Now, some people try to tell me, sir, why don't you do the advertisement? Why don't you do those things? Let everybody get that. Okay, you are there. You all can tell to others. 90% of everybody who is teaching costing in India were our students. Okay, they all have stolen notes from us. They all have stolen concepts from us. Okay, everything. There is no research that anybody does in costing except copy our notes, copy our books and everything. I am very shameless about it because people shamelessly copy the content. Okay, and from the time I started from 2002, I have not advertised about myself, and neither I have intention to be doing that. One more thing might be in future. Okay, if the things allow me, I'll be putting all my latest courses also of costing and for FM and for CA Final SCPM on YouTube for free. Okay, everything, because education as per me today, I seriously think that there is need for good teachers, okay, who can teach you in a logical way and who don't try to do a drama with you all. Drama will mean one day before they try to tell you only do this, this is most important, this is this. Whatever is there in the course, believe me, if you will do that, and you will not try to be thinking what else to do up and so on. Whatever we give you, you do that. That is end of the things. You don't need to meet me one day before on YouTube live, sir, this is very important, help me to revise up and so on. These are only ways of killing your time. These are only the ways through which you will fail. Okay, and I do not advocate that. I do not advocate that. If somebody else does, okay, thanks to them, please do it. Okay, my Telegram ID is below. My Telegram group is below. Telegram channel is below. Okay, our latest batches currently you have to be buying only. There is no other option. You get the book also along. Later on, whenever it will be available, full free of cost. Okay, my announcement will be coming to you all. Okay, hope you all enjoyed. One thing that again I'm saying, I need not come over here to tell you that this paper was easy or tough. It is easy for some, it is tough for others. I come over here for complete solving. You want to make use of these videos now. Best thing is download the question paper, solve. Wherever you try to be thinking you all were not good at, try to see the video for that part and share it with your friends. Share it with all those people who have to be giving CA Inter in future or who have given this attempt and they wish to be knowing how many marks they were giving. And lastly, you all can comment if you did only a certain part of a certain question, how many marks you'll be giving, how many marks you will be getting. I will try to answer to the best of my capabilities. Thank you guys. CA Anuj Jalota, I see you once whenever the exams come and once during the RTP. So therefore, I'll see you next time in another lecture. Bye.